Hey everybody, Mark Yegi here, and I want to share a story with you from somebody that I ran into this week. Our team ran into this week, actually. So this person is getting really close to retirement, has actually retired and went back to work part-time, and is planning to stop working in the next year. Now, the person's already got some good investments. This person has real estate, 5 investments in real estate, which is great. And the mutual funds, they told us they're paying a 1.8% fee, annual fee. Now, that's what they see. Now, I want to tell you something about mutual funds real quick. Mutual funds have to tell you what they're paying, but there's a lot of hidden fees that are in there too, that you have to dig to find what they are. 12B1 fees, sales fees, there's expense ratios, all kinds of little fees that really, there was a study done a few years ago, add up to about 3.4%. Now, that's your 3.4%. So that's right off the top. So if you have a great year, if you're making 30% on your money, that's great. But a year like this year, you're losing 20, 10, 15, 30. Some people have money in Facebook and Zoom and they've lost 80% of their money. But still, that broker gets paid that 3.4% every year, and it comes right off the top, right out of your money. So you got to be careful about having other people manage your money. I have a saying, it's never give up your power in your health, your wealth, or your time. And this is part of that saying, is that to be able to take control of what you're doing. Ronald Reagan said, trust, but verify. So if you're going to have other people handling your money, just make sure they know what they're doing. Make sure they're doing it right. And that you can look over their shoulder and go, okay, I agree with this investment philosophy. That means you have to take power into your hands to learn some of this stuff. It's your money. You should know about it. Now, this person said they lost 10% in their mutual funds in the recent downturn. Now, I don't know when this recent downturn was that they're talking about, but I can tell you that the S&P 500 was down about 22% recently. Some stocks, like I just mentioned, Netflix and Zoom and Upstart was down like 85%. Some stocks are down 70, 80, 90%. The market in general is down 20%. If they lost only 10% on their mutual fund, I have to say, congratulations, that's awesome. You didn't lose as much money as the regular market. They're a buy and hold investor, and they're just buying and holding. Now, if you held that stock that went down 80%, you got to have to hold a long time for it to go back up to even. We're not investing to get even, are we? If you invest in a stock that goes down 8%, it's got to go up about 9 or 10% to get back to even. If you invest in a stock that goes down 50%, now it's got to go up 100% to get back to even. It's got to double. How many stocks double? I mean, if you know them, let me know, because I can invest with you. And then if it goes down 80%, like it's going to be years before you get that money back. Yes, it's Netflix and it's not going to go out of business or whatever you tell yourself, but it's going to be a long time before it climbs back up and goes through all those sellers that sold on the way down. So buying and holding is just a weak strategy. In theory, it works because the markets in theory go up over time. It doesn't always go up. Like right now, like people are having a lot of trouble. Hedge funds are going out of business because they can't figure out what to buy and when to buy and what to short and what to sell. And it's been crazy out there. This person wants something they can do in retirement, and they like the idea of being able to travel while they invest. So they're looking for basically another career. Now, I highly recommend, if you've got any kind of money at all, that you should learn how to handle it. You should learn how to invest it. If you're going to learn a system, you should learn a system that's proven. Why do we learn a proven system? Well, it's like anything. If you want to learn anything, you don't just, if you want to learn golf, you don't just pick up a golf club and go to the golf course and figure out that you're going to be a great golfer. You're probably going to read a book. Reading a book doesn't make you a great golfer. Maybe you take a course. Taking a course doesn't make you a great golfer. Maybe you go practice. That's cool, but sometimes you might practice the wrong thing. So you get a coach. Well, now you're getting there. Like he can see some things that you're doing right, wrong, and have you fix them right there and then start practicing those. I can tell you that I'm really good at hitting a slice because I've practiced it for a lot of years. It wasn't until I got a coach that I figured out what I was doing wrong to get rid of that slice. So you've got to be immersed in an ecosystem that's going to support you, that's going to teach you the right way to do things, that it's going to teach you from experience what other people have done. We have a system called the Cash Flow Machine that makes safe, reliable income, and it does it from the stock market. We take a stock market asset like Amazon or Apple or Tesla stock, and we basically create our own dividends from it. We create our own rental from it, if you want to look at it as a real estate analogy. And that helps us make, well, we shoot for 2 to 4% a month. And if you can stay away from the pitfalls of losing money, you can end up making money over time. If you're going to be invested in mutual funds, just understand that mutual funds have hundreds, maybe thousands of stocks in them. you're not going to do that well because there's crappy stocks that are weighing down a mutual fund. There's good stocks that are doing well, and there's average stocks in there. Why not get rid of all the average ones and just focus really well on the things that are doing well? And that's creating a safe, reliable income strategy from having a proven system. We can tell you more about it if you want to text us or message us, but that's really the key. And that was the key to this person. Great job on having real estate. Mutual funds, not so sure. I'd rather have control of it and be able to create income off of that. We kind of want to figure out the way things go in retirement, and I hope that helps you as well.